Welcome back. I'm Pratap here. Today is 18th December 2024. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous report. And also you will be learning an important topic, the 3 minutes fine-tuned zone as a supplement to fine-tuned 5 minutes zone. It's a very important topic. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. And the training cost is over 8,000 US dollars. We are providing complete free training with high quality video training program. And you can access all the training lessons at our NeoStock YouTube channel. At our homepage, you please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. You need to start our training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. All the old links are available at our Telegram channel. Any important updates we will be providing at our Telegram channel. Okay, now let's get into the analysis discussion. Yesterday, end of the day report, we identified 8 high liquidity zones from daily and 75 minutes time frame. We got good trades from couple of stocks, and in one stock we got even couple of trades, successful trades we got. Especially Hero Honda gave 2 trades, successful trades. And the Hero Honda is a daily high liquidity zone. See here, this is a rally, 2 base candles and a rally candle identified by our NeoStock software. And this daily zone is fine-tuned with 75 minutes time frame. We have identified 2 order flows at 75 minutes time frame. So let's look into those 75 minutes zones. Here you have a drop base rally. This is the 175 minutes order flow. And another one is a rally base and a rally as a ERC candle. The dynamic view point of view. So in these two, actually both are looking like LOTL zones. But why we have drawn this LOTL? Because there could be some distinct, some kind of distance will be maintained between the lower time frame order flows. So that's why go to the 15 minutes time frame, you will understand. Oops, TradingView is taking more time to load. Okay. So in the 15 minutes time frame, lot of order flows. Have you observing? This is the 75 minutes, second 75 minutes. This is the first one. So in this one, top one, you have a drop to base candles rally because the actual order flow started from the zone. Inside the zone, you will see the lower time frame order flows. So that's why drop base rally. And we have another rally, 1, 2, 3, 4, 5 base candles rally, rally base rally. And again rally base rally. You have 15 minutes order flow. This is the one, this is the second one, and this is the third one. We have 3 order flows. So this one is the nearest to the current price. So first we should plan our trade in this area. If this is violated, the next one. If the next one is violated, and the below one. And again the 15 minutes time frame, we have fine-tuned 5 minute zones. TradingView is taking time. Please be patient. Okay. Let us look into the order flows. Here we have five minutes time frame in this rally, base rally, and here drop base rally. We have order flows, and then we have drop base rally. But here the picture is not very clear. Have you observed? Do we really have a fine-tuned zone here, 5 minutes time frame? Okay, we know that this is a rally candle, prices are moving. But here, to be honest, the structure is not at all clear. But you are sensing there is an order flow here. So how do you confirm whether really there is an order flow? At the time you need to understand we have a supplement to the fine-tuned 5-minute zone. Instead of fine-tuned 5-minute zone, you can also look for fine-tuned 3-minute zone. Why 3-minute zone? Because 3-minute zone also you can divide the total time frames. You get equal 3 minutes candles. Like how we are using 75 minutes, 125 minutes, 25 minutes, exactly the same way you can also use 3 minutes. But you may ask a question, why it is a supplement to 5 minutes zone? Because 5 minutes is a fine-tuned zone inside the 15 minutes. How many 5 minutes candles you will be having inside the 15 minutes time frame? 3. Because 15 divided by 5 equals to 3. You will get 3 fine-tuned 5-minute zone. A zone can have how many candles? The fine-tuned zone can have how many candles? Compare it to 3 to 5 candles. That is what I explained you in lesson 15. If you did not remember, please refer the lesson 15. Lesson 15, I told you the technique. The ideal scenario to find the number of candles in the lower time frame zone should be between 3 to 5. So in one 5-minute zone, you have 3 candles. See, in 75-minute zone, you have 5 15 minutes candles. Exactly the same way, in the 15-minute zone, either you can have 3 minutes or 3 candles or 4 candles or 5 candles. Either one is allowed. If you are taking 5 minutes, you are getting 3 candles. If you are taking 3 minutes, you are getting 5 candles. Because 15 divided by 3, 5. So either one. That's why 3 minutes can be used as a supplement to the 5 minutes. So because I don't have the clarity, go to the 3 minutes time frame. To confirmation, really order flow is what we are thinking is perfect or not. Today it's taking more time, trading view, testing our patience. Okay. So luckily 3 minutes data is exactly available from this zone. Because TradingView is giving only 20,000 candles. So this is the starting. 22nd April 24 and this zone is at 23rd April. We are lucky to have this zone just before ending of 3 minutes data. Okay, now look into the 3 minute zone. You have a drop candle, you have a base candle, You have a rally candle, drop base rally. You have a perfect zone is available in this area. So this is the fine-tuned area, and moreover this zone is exactly within the daily high liquidity zone. Sometimes zone will overlap, a part outside, a part inside. So all these are all perfect conditions. Okay. Now go to the, even 3 minutes also you can observe, nothing wrong. So today morning 9:15 candle, 3 minutes candle, we got a trade, and morning 9:27 3 minutes candle, it reached the target, 15 minutes target. First let me show you the 15 minutes target. See here you have a drop, you have 1, 2, 3, 4 base candles, and again a drop candle. You have a ERC candle, we got the trade, and then prices moved and reached the target here, the same candle. Within 15 minutes, the trade is completed. Go to the 1 minute, you get best clarity. This is the morning 9:15 candle, 9:16 candle. 9:15 mostly we may miss the trade, but 9:16 definitely our trade will be executed. But you need to add some small entry buffer. If you would have added small entry buffer here, your trade would have been executed and finally reached just before reaching. Generally you keep some buffer and you exit. So when you got the trade 9:16, when you completed the trade in 9:28 seconds, that means in 12 minutes your trade is completed. How much profit it has given? Hero Motors has given 6,180 rupees profit, which is a 5.3% ROI. And this is a fine-tuned 3 minutes entry inside daily high liquidity zone. It is a 5-minute zone. Instead of 5-minute zone, we are using 3-minute zone, but it is a fine-tuned zone. What is fine-tuned zone? Inside daily we have 75-minute zone. Inside 75 minutes we have 15-minute zone. Inside 15 we have 3-minute zone. Because 5 minutes some clarity is missing, we got the confirmation. That's why I'm saying 5 minutes can be used as a supplement to the fine-tuned 5-minute zone. I'm sorry for my mistake. 3 minutes, fine-tuned 3-minute zone can be used as a supplement to the fine-tuned 5-minute zone. But you should be very careful when using. You have to use only in those scenarios where fine-tuned 5-minute zone clarity is missing. At the time you can go for. You are sensing there is a zone, but clarity is not there. You don't want to draw the zone, compromise and draw the zone, because it is a final zone. 5-minute zone is our last fine-tuned zone. You may compromise and draw the zone 15 minutes, fine-tuned 15 minutes. You may compromise and draw fine-tuned 75-minute zone. Why we are compromising? To find the real order flows, institutional order flows at 5 minutes time frame. So that's why 5 minutes level drawing compromised zones is not advisable. But if clarity is missing, how do you confirm there is a real institutional order flow? Maybe you have some clarity is missing, but you have drawn the zone and later on the zone is violated. That's why to avoid that kind of issues, you can go to the fine-tuned 3-minute zone as a supplement to the fine-tuned 5-minute zone. If that is also not having clarity, better don't touch that zone. Ignore the trade in that zone. One of them should give you clear clarity. So that's why I'm saying fine-tuned 3-minute zone can be used as a supplement to the fine-tuned 5-minute zone when the fine-tuned 5-minute zone some clarity is missing. At that time only you have to use. Okay, with small entry buffer you would have got this trade. And after that again prices entered when at 10 o'clock 1 minute candle or even 10 o'clock candle. Both candles price. Now this is even more clean trade. Why I'm saying clean? Don't require to use even entry buffer. Your trade would have been executed. Generally we use entry buffers. Why? Fear of losing the trade. We will be thinking maybe before reaching the zone, probably the zone might be pushing. If that is the case, we will be missing our trade. With that fear, we will keep some entry buffer always. Even before reaching also, we keep some buffer and we will exit. See here also, if you keep a buffer, definitely your trade would have been exited here. Just how much? 95 paisa buffer, that's it. Generally, this is a very big 4,000 rupees, nearly 4,400 rupees stock related trade. Generally, you keep 2 or 3 rupees buffer and you will exit the trade. 95 paisa is enough here. Generally you keep 0.1% maximum what I am saying, if your risk supports. So it supports around 4 or 4.5 rupees buffer. That means somewhere here. You don't require to keep that much buffer. Just 1 rupee or 1 rupee 20 paisa buffer is sufficient to get this trade today. First trade I am talking. Second trade, why I am saying very clean, even if you don't keep buffer, your trade would have been executed. Even if you don't keep the buffer, still your trade would have been reached the target. That point of view I am telling. See, all these are all high liquidity zones performance point of view. We are talking about these points. High liquidity zone performance is different. Your real trades are different. While doing real trades, you keep some buffers before taking the trade and before you exit. But high liquidity zones performance point of view, how it gave the trade that we are calculating. With the buffer it gave the trade, or without buffer it gave the trade. Second trade don't require to give the buffer. That's why we calculate without the buffer what is the profit. It has given maximum. See, here our goal is to calculate the maximum possible profit given by our zones. But in your real trades you may not get that maximum profit. Maybe some profit less because you are using buffers. Whatever the statistics I am showing, with these statistics you may get less profit. Some very little less. Not like maybe if this is a 6,000 rupees profit, if you would have got, if the zone has given you, maybe you would have got 5,700 rupees profit or 5,800 rupees profit. Some 0.1 or 0.2% difference you will be seeing, that's it. Because of the buffers we are using. Why we are using buffers? With the fear of losing the trade or fear of losing the profit. That's why before exactly entering into the zone we exit. Before exactly entering into this zone, entry zone, we take the trade. So that is a reality. But this is the performance of our high liquidity zone. The main goal of our HLQ zone analysis is not to identify my trades or your trades. What is the opportunities this our software has given? Every day I am making these videos to tell the world or to tell the public or to tell the traders how well my software is working. How well our NeoStock software is working. That performance evaluation point of view, every day we are discussing these HLQ zone analysis. Of course, the second objective is you will be learning because new points you will be seeing every day when we are analyzing the charts, real charts. Those new points will help you improve your experience. Why people having 3 years, 4 years experience also, why every day they are listening these videos? Because they want to gain even more and more experience. They want to see even more and more real-time issues. So that kind of understanding to get, people are watching these HLQ zone analysis videos. Anyway, beginners will be, they will be watching these videos. This is the only way to get best experience for you people. Because live examples always give better opportunities to learn the concepts in a much perfect way. Because theory is different, practical is different. Definitely some differences will be there. Of course, practicals will be according to the theory only, but some differences will be there. Some exceptions might be there. Those exceptions, if you understand, your experience will improve. That is what every day you are learning. Exactly. See, today the point you learned today, instead of fine-tuned 5-minute zone, we used fine-tuned 3-minute zone, which is acting as a supplement to fine-tuned 5-minute zone. But the fine-tuned 3-minute zone, it has clearly described there is a order flow, institutional order flow is there. But fine-tuned 5-minute zone, some clarity is missing. Because we were able to identify the institutional order flow, we need to see, ultimate goal is to identify institutional order flows. If there are order flows, they give us good trade opportunities. Today it gave 2 trade opportunities. First trade completed just 12 minutes. In 12 minutes, you got 5.3% ROA as per one futures margin cost. And what about the second trade? Second trade at 10 o'clock and reached the target at 10:45. Within 45 minutes, the second trade is completed. And the second trade, you got 6,545 rupees, which is 5.6% ROA. Why there is a difference between these two? Here, I calculated for exactly from the end, this proximal entry to this proximal target zone. But here with the buffer we calculated from here to here with the buffer. That's why you have seen some difference in the profit. These profits are maximum profits provided by our software. They are not the profits provided by the software. That is the wrong word. They are the opportunities provided by the software. How much profits you took from these opportunities, it is all depending on where exactly you took your real trade. That is how you should understand. Okay, this is about Hero Motors. We will be seeing one more stock also. We used a 3-minute zone instead of a 5-minute zone. That also gave a trade, but we didn't take the trade because that was a tested zone. But anyway, we will discuss that later. Before that, we have one more stock is there. We got a good trade. That is a Nifty Next 50. Nifty Next 50 is a 75 minutes high liquidity demand zone. Did you notice? Yesterday and today, both the markets are bearish markets. But in bearish markets, we got bullish trades. That is the power of our high liquidity zones. It looks like this zone is violated, right? But before violation, we got a trade. First of all, what is this trade? This is a rally, 1, 2, 3, 4 base candles. See, this is the hidden body they added. Generally, people don't recognize this as a rally candle. But our dynamic view with the hidden body, it recognized that as a rally candle. It is a hidden zone. Because it is a hidden zone, institutions kept a big order flow and they executed that order flow for a long period. Okay, how I identified this 1 minute order flow? How I identified? First, I went to the fine tuning this zone with the 15-minute zone. I have seen drop, base, rally, but this is not really a base candle, or is it a failed ERC candle? Some concern is there. But still, what I did initially, I have drawn the zone like this. A 15 minutes demand zone. First, I have drawn the zone. Because ultimate goal is to find. Then I went and saw whether there is any 5 minutes order flow in this area. Some of these candles are there, failed ERC, rally, again failed ERC. Can we consider as a base candles? Some of the doubts I got. But one point that created interest is sharply prices moved from here. Then I have seen here also sharply from the area. Actually, I have drawn, generally what I do, when there are sharp order flows are there, I draw a horizontal line. Maybe my sense is there could be some aggressive trade setups or high liquidity zones might be available. That's why generally what I do when I see some interesting price actions, I draw a horizontal line and before historic data I will observe. Then I observed exactly from the same blue color line what I have drawn, sharp rejection, see the huge movement. Then I sensed there could be a 5 minutes zone might be available. That is what I thought. And also before that again I have seen sharp rejections. Then I confirmed this is the area, some 5 minutes high liquidity zone might be available. And here also price came very close and then moved up. When I saw I didn't have proper leg out candles to confirm, a rally candle, maybe a base candle, this is not a leg out, valid leg out somehow. But here we have a rally, base rally, but this is already stopped out. So this is not the real area, somewhere here. Then for confirmation I went to 1 minute time frame. The moment I went to the 1 minute time frame, I saw the real magic here. There is a 1 minute high liquidity zone available in this area. See exactly on the blue color line area, I identified drop, base, rally, and again it tested. While testing, again drop, base, rally is created. LOTL zones, generally when it happens in high liquidity zones, there 80% chances are there. And again drop, base, rally took place. That means institutions keep on adding new order flows in this area. Again drop, base, rally is created. That means institutions each time they are adding new order flows. Each time prices are entering, institutions are adding new order flows in this area. How much power this zone will get? Let me delete this blue color area now. Blue color line. So now we have drawn the zone. Now I observed the entire historic price action. See, here also prices came near to that. Again drop base, tiny candle, drop base, rally, maybe. And in the recent price actions, huge rejections. Again a huge rejection. Now again institutions created drop base, rally. The initiation is started from this zone. Drop base, rally. Have you noticed? All these are all indications. This is the area we have strong institutional order flow. Until the zone is violated, we can take the trades. As many trades it gets. Again you see here. Drop, base, rally. Maybe you may not convince this is a base because it is looking like medium size like candle. We can ignore. Again drop, rally. Now this is a base candle, rally candle. Some action is happening here. So until this zone is violated, we can plan our trades. Now what I did, I deleted this 15-minute zone. Of course, you can also consider this 1-minute zone as an horizon to this 15-minute zone. But anyway, this 15-minute zone, we have some doubts whether it is base candle or ERC candles. Our concern is not about that zone now. We identified the real order flow. This 1-minute zone is high liquidity zone. It can be used as an aggressive trade setup. The concepts you learned in lesson 21. Definitely, until the zone is violated, we can plan our trades. Today also it gave a trade. See today, this is today's candle. Today morning 9:26 candle. Very neat and clean trade. And then prices moved and reached the target at 9:42. You got a trade at 9:26 and reached the target at 9:42. In 16 minutes, our trade is completed. Just 16 minutes. Reached the 15 minutes target. After that, the 15 minutes target sharply moved. Maybe, definitely, I am sure, you might have taken one more trade here, but it would have been stopped out here. Finally, its time is over. Today is its expiry day for this 1-minute zone. This is a successful trade. You got a good profit here. And maybe this could be a stopped out. Small loss you would have got. You can ignore that because already you got a good profit. If you would have observed this zone, earlier several trades you might have taken in this zone. Nifty next 50 is listed in F&O category. How much profit you would get in this stock? 3,623 rupees profit, which is 4.2% ROI. And its futures margin cost is around 76,000 something. That's it. If you are having 2 lakhs, probably 2 lakhs or 2 lakhs 20 or 30,000 rupees capital, you would have taken 3 futures. If you are an option trader, you would have got even more profit. Maybe another 3 times, maybe around 10% margin you would have got. But risk management is very, very high compared to the futures in options. Unless you are an expert in options, you know how to manage the risk. Otherwise, going to the options is quite risky. But there are some people doing the trading in options. They may get even more better profits. But anyway, futures is the ideal scenario for identifying the performance of our software. So according to the futures margin cost point of view, we got for 4.2% ROA. It's a very good ROA. Even though it is less than average our 6%, generally in indices, because in indices the volatility is very less in the stocks, so momentum will be less. Generally you can't expect 6% ROAs, rarely you get. But getting above 3% in indices is a very, very good profit. 3% ROA on your capital for one future. So we got 4.2%, good profit. See how well this 1 minute high liquidity zone, how it helped us to identify this, getting this profit. The real order flow they kept. Once the order flow is consumed, see easily the zone is gone. Maybe here institutions might have kept some trap. Maybe they pushed it some extent again. After that, it worked and finally it is completely violated. There could be some trap below this zone. That's why some extent it worked. So if you go to the 5 minutes, you can see this is not the horizon. Maybe this could be a trap. Bear trap. This could be. Institutions might have used this as a trap. See, that's why once it is violated, see, it picked up the orders. Institutions here, they used bear trap. Because your stop loss is hit, you go for short trade. Short trades are nothing but bears. All these bears are trapped and again they pushed up to here. Somewhere here. Maybe some order. It didn't reach up to 15 minutes target. Because in this drop candle, some order flow might be here in this area. 1 minute strong order flow. Anyway, see after that, all the traps, everything is broken. Of course, today is a bearish day. But bearish day you got profit, some profits. That is what you should understand. Before the zone is violated, we got a very good intraday trade opportunity. That's why bearish days, yesterday also all trades are long trades only. We didn't have any short trade. Even today also all the trades are long trades only. And about India, already I explained this is a daily high liquidity zone. How I fine-tuned this zone, we already discussed in the previous one of the analysis videos. It's taking time to load today. Okay. See all these zones we fine-tuned earlier. I think this is the earlier zone. Sorry. About India, drop base rally. This is the one I explained earlier. And again, LOTL zone is created. This is also a high liquidity zone. I don't think I explained this. But anyway, let me show you how I fine-tuned this zone. So 75 minutes. Here we have a 75 minutes order flow. Leg in failed ERC candle. Sorry, not this one. Rally base rally. This is the one I considered. Rally base. This is the 75 minute zone. This 75 is having a 5 minutes horizon identified here. So that is the one planned the trade today in case if the prices come here. Other than this, any other 75 minute zones? No. Here the structure is not clear. So I didn't go for any 75 minute zones in this area. But here some pro gap area is there. Somewhere here. See today prices entered into that pro gap area and from there it pushed up. But anyway it is outside our zone price action. We focus inside the high liquidity zones. Okay, this 75 minute zone is fine tuned with the 15 minutes time frame. The origin identified here, rally, 3 base candles and a rally and follow through candles. And in this again I fine tuned with 5 minutes time frame. The 5 minutes is the origin for this entire fine tuned 75 minute zone. Okay, so very slow today. So here we have a rally, 2 base candles at the hidden body, rally and again follow through candle. See, prices went into this origin and picked up, and entire this 75 minutes zone has been completed. Recently once prices came near to the zone and again they moved up. Now prices, recently once the zone is also tested multiple times. The fine-tuned 5 minutes, this is not the fine-tuned 5 minutes, this should of course looks like fine-tuned, but this is also origin, 5 minute zone as an origin, the entire 75 minutes fine-tuned zone. So this origin is having strong institutional order flow. Anyway, today prices didn't enter into the zone, we didn't get any trade opportunity. So this is about India, how I fine-tuned this zone. See, the price is outside only today. See, all these are all previously drawn zones. Why I'm keeping? Once we fine-tune, anytime, next time when our software identifies this stock, at the time we may get trade opportunities in these fine-tuned zones. Previously we have drawn this zone, this drop base rally. Drop base rally previously we have drawn, but today again, after that again a LOTL zone is created, identified by our software yesterday. Okay, next one is Angel. This Angel one is already I explained this stock. Previously we fine-tuned, the same zone only we are using now. But today we didn't get any trade opportunity. Angel 1. Okay, so all of a sudden I wondered what happened to this fine-tuned zone. It's missing. Previously I explained this, but anyway, if you want to see quickly, rally base rally at 75 minutes time frame. We have a drop base rally. Within that area we have a 15-minute zone. Rally base rally. Within this 15-minute zone we have a 5-minute zone. Fine-tuned 5-minute zone. Rally 1, 2, 3, 4, 5 base candles with the hidden body. Again a rally candle. Failed ERC at the dynamic view. So this is the area we planned the trade earlier. Prices came and moved up in this once. Why? What is the reason? What happened? If you look here, there is an aggressive trade setup is available here actually. But why I didn't focus on this is we didn't have proper price action clues in this area. Go to the 15-minute zone. There is no price action clue. So we have a drop base rally. There is no 75-minute zone here. So within this there is a 5-minute zone. Because we didn't have a price action clue, we didn't plan any trade. But today prices entered into this area and gave a trade today actually. Because it moved, we are able to tell. But we didn't, without price action clue, we can't. But I am trying to tell you, in a bearish day, how our high liquidity zones are working. Just to tell you, I am showing this. It's not easy for us to identify this zone. You may see, prices came near to this zone and moved up. We can take this price action. It's not very clear, this one. Maybe we may. But I told you, yesterday also I told you, as a beginner, you should look for multiple price action clue because you are making a lot of mistakes. So this aggressive trade setup would have given you a good profit today. See, A very good move happened. When it reached this zone at 12:30 and then started moving up. Probably it might have reached 15 minutes target also. Any 15 minutes target here? Here we have a 15 minutes target. But it's failed to reach. Okay, anyway, we didn't plan any trade in this area. Now we didn't have proper price action clues. Just want to tell you some movement from here. Our plan is in this fine-tuned area. And Bandhan Bank also previously we discussed this was the zone created in the year 2020. So we didn't plan any trades in Bandhan Bank. Today TradingView is testing our patience. Okay. See, this is 2020 March. Didn't plan any trade in this, just leave this stock. Glenmark is also a daily high liquidity demand zone. Okay. You may ask, something happened here. No. Actually today after market starts, I drawn this zone. Okay, first of all, where is the 75-minute zone here? Here we have a 75-minute zone. Rally, base, rally. Then what is this I have drawn here? Even I forget what I have drawn here. Did I look for any aggressive trade setup? Okay, anyway, let me see later. First, this is the one, a rally, base rally. And within this, we have a 15-minute zone. Drop, base, rally. The 15-minute zone. This is today's morning 9:15. The trade plan was in case if prices reach, we can take a dynamic trade. Dynamic trade means during the live market zones create and say the live market 15-minute zone is created inside the 75-minute zone. And this 15-minute zone I have fine-tuned with 5 minutes time frame. We have a drop, 3 base candles and a rally candle. This is the 5-minute zone. This is the area I was preparing for a plan in case if prices enter. But today prices did not enter into this dynamic zone. But here already I created some zones here. What is that I did? I have drawn a zone. A 15-minute zone I have drawn. Is it a high liquidity zone? Yeah. Sorry for my mistake. Actually, we have a 75-minute zone. Sorry for my mistake. Here, 75-minute zone. We have a drop. You have 1, 2, 3 base candles and a dynamic view rally candle, dynamic view and follow through candles. So this is the way I have drawn fine-tuned 75-minute zone. Within this 75 minutes area, these 15 minutes zones I have drawn. Now I am realizing I am becoming old and I am getting forgot what I have drawn. Okay. So this is the 75 minutes area. We already in that area, in this area, 15 minutes order flows I have drawn. See, drop, base, rally and follow through candles. This is the 15-minute zone. And another 15-minute zone, drop, base, rally. All are in this 75-minute zone. We have two 75-minute zone. This is one 75-minute zone overlapped at the distal line and another 75 minutes zone exactly within the zone but came from the distal line, not overlapped, just touched the distal line. From there, this entire zone is drawn, 75-minute zone. One is at the proximal line point of view and another one is at the distal line point of view. We have to zones are there. So within this 75, you have two fine-tuned 15-minute zones. These 15-minute zones, again I fine-tuned with 5 minutes time frame. The first 5 minutes time frame here, have you seen? The structure is not good because there is no 5 minutes order flow here. But here you have a drop base rally. This is the origin for this entire 15-minute zone. So that's why this is the area we need to plan our trade. This is the origin. 5-minute zone as an origin to the 15-minute zone. And also here you have drop 1, 2, 3 base candles and a medium size leg also part of the zone, and then a rally candle, drop base. This is a fine-tuned 5-minute zone inside the 15-minute zone. 15 also within this area. I have already shown you. Let me go to 15 minutes. Here you see. Drop base rally. Exactly the same area. We have entire 5-minute zone is also there. If risk is high, you can do adjustment. You know how to do adjustment. Okay. You can do adjustment like this. Sorry. You can do adjustment like this. You can do adjustment like this. It's up to you. Why adjustment like this? Because yesterday's video or day before yesterday's video we discussed where the order flow is, the imbalance is getting started. I think last Friday's video. Actually, the imbalance started from here. So that way I can minimize my risk to this area. This is the way I can plan my trade. See, trade planning is different, drawing the zone is different. While drawing, we can draw the zone like this. But while doing trade planning, I limit it to this much. And prices are entering here, then only I want to plan my trade. It doesn't mean this is the leg-in candle. No, this is the leg-in. And these three are base candles. Medium size part of the base and rally. This is as per the theory. As per the practical, the imbalance is started from here and continued. But why it is resulted as a medium size candle? Because the time interval is over. Continuation to that, the prices were moving up. That's why when you combine this entire thing is the imbalance area. Probably this is the area we have the balanced, real balanced area where you might be having a real institutional order flow in this area. To draw such kind of things, you need some experience, you need to understand, you need to see several scenarios, how the order execution is taking place in the live markets. All these things you have to observe. That's why time to time in HLQ zone analysis videos I am explaining all these concepts so that your experience will grow very fast. But anyway, today prices did not enter. Aromatas we discussed and Zubliant Foods. This is another daily high liquidity zone. Yeah. Previously, once our software identified a 75-minute zone, I already explained this, but now here a 75 daily zone is created. How our software identified? A drop, 1, 2, 3, 4, 5 base candles and a rally candle. Drop base rally with 6 base candles. We have so many order flows inside this. This is the one we would have got a trade today. See how much profit we would have got. Good profit we would have got. But we didn't take the trade because this fine-tuned zone is tested zone. Here also I used the 3 minutes zone as a supplement to 5 minutes zone that I will explain. First of all, this is a daily zone. Drop 5 base candles rally. This one I fine-tuned with 75 minutes time frame. Here we have a 75 minutes. We have a drop, 1, 2, 3, 4 base candles and a rally candle. This is a 75-minute zone. And another 75-minute zone I have drawn. Drop, you have 1, 2, 3, 4 base candles and a rally candle. Drop, base, rally. So we have two 75-minute zones inside. When we go to the 15 minutes, multiple 15-minute zones are there. Let me go to the 15 minutes time frame. multiple 15 minutes. See here, rally, base, rally. Again, drop, base, rally. And again here, drop, base, rally. Again here, drop, base, rally. 15 minute zone. Again, rally, base, rally. So this is the 75. In this entire 75, at proximal line of the 75, drop, base, rally. Inside, rally, base, rally. Again, in order for the 75 minute zone, lower time frame zone as an horizon. Drop, base, rally. This is LTF lesson 22 concept. This is an horizon to this fine-tuned 75 minute zone. See how many order flows we have. 1, 2, 3, 4, 5, 6 order flows. First zone we have 75 minute zone, we have 3 order flows. Second 75 minute zone, we have 3 order flows. The order flows at the proximal line, at the distal line, in the middle of the zone. Here also at the proximal line, at the distal line, and at the middle of the zone. Lot of order flows they created institutions. It's not easy to violate this zone. And previously when the fine-tuned zone is tested, see how sharply prices moved. Today also came very near to the zone. With the entry buffer, your trade would have been executed. After that, see the movement. But why we didn't plan our trade with entry buffer or even in this zone? Because already it is a tested zone. The fine-tuned 5 minute zone. Go to the 5 minutes time frame. This 5 minute zone, I will come at the end. This is the area we need to discuss about 3 minutes also. But before that, let me complete the others. Here you see drop, base, rally. The fine-tuned 5 minute zone. Here at the distal line, again you have a drop, base, rally. And here also you have drop, base, rally. Some of these zones are tested, that is what you have to observe. But even though they are tested again, new order flows, drop, base, rally created, or rally, base, drop is created from the same area. In such kind of situations, you may plan for next trade also, because you have new order flows are created from the same area. Could be high liquidity area. Okay, here rally, base, rally. This is a fresh zone. And this is the lower time frame zone as an horizon. Already 15 minute zone, lower time frame, but here we have again a drop, base, rally, a fine-tuned zone. From this fine-tuned zone area, it picked up the orders, and this entire movement is started in the daily high liquidity zone. This lower time frame zone as a horizon. Okay, now the one we left, this is the one. See here, drop, 2 base candles and a rally candle. If you plan, perfect. This zone, drop, 2 base candles, rally. Okay, some of you may say, why this is a base candle, why can't we use this as a leg candle? Rally, base, rally. If this is a rally, base, rally, this zone, if you consider that zone, this zone is tested and that rally, base, rally is pierced. It could have been pierced. This rally, base, rally is because prices went a little below this zone. The base candle is very small. Below it came, a little below. So that means this order flow is not valid at all. So now the question is, do we need to consider this as a drop base rally, or do we need to consider this as a rally base rally? Of course, this drop candle is bigger than this rally candle. In case if you consider this is a medium size candle. So that's why I got the confusion. So what I have to do? I know 3 minutes fine-tuned zone could be a supplement to this 5 minute zone. If the 3 minute zone order flow is a very clear order flow, probably we can consider. That is the way I went to the 3 minutes time frame. Now I am moving to the 3 minutes time frame. Before moving to the 3 minutes, see the structure. Everybody, please look into the structure of this zone. It gave a confusion. Is it a drop 2 base candles rally, or is it rally 1 base candle rally? Such kind of decision making, we have to take a decision. So I went to the 3 minutes time frame. 3 minutes time frame, the structure is very excellent, very clear. See the 3 minutes time frame, how the zone looks like. Now you tell me. Drop, base candle 1, base candle 2, base candle 3, base candle 4 and a rally candle, follow through candle. Is it very clear now? Now I have drawn drop, 3 base candles and a rally. I have drawn here, 3 minutes I have drawn. Now I shifted to 5 minutes. Now you see the 5 minute structure. Now what the 5 minute structure confirmed here after you draw the zone. The 5 minute structure confirmed. This is a drop candle. We have 2 base candles and then we have a rally candle. The 3 minute structure confirmed. This is a drop base, 2 base candles and rally. But 5 minute structure we have some kind of ambiguity, some confusion. So see, sometimes this is the way the 3 minute zone you can use as a supplement to the 5 minute zone, but not the replacement. Remember, 3 minutes fine-tuned 3 minute zone is not a replacement to the fine-tuned 5 minute zone. Fine-tuned 3 minute zone is can be used only as a supplement to the fine-tuned 5 minute zone. When you will use the supplement, whenever main zone some kind of clarity is missing, then only you should go for. When clarity is there in the 5 minute zone, you have to believe that zone. Because that is the order flows we are believing for our HLQ zone strategy. Our HLQ zone strategies, the orders will be placed from the fine-tuned 5 minute zones. Based on that only strategy is built. The daily and 75 minutes high liquidity zone strategy. If you are using other strategies, okay, that is a different story. I am talking about the strategy we developed for daily and 75 minutes high liquidity zones. If you learn some other concepts, for those some other concepts, if you are using 3 minute zone, that is okay. I am not objecting. But here, this point should be applied only for HLQ zone strategies. The 5 minute zone, the fine-tuned 3 minute zone as a supplement to fine-tuned 5 minute zone. The word fine-tuned is very, very important. Because entire HLQ zone strategy is built based on fine-tuned zones till 5 minutes time frame. That should be the entry. And target should be 15 minute zones. So this is about Zubliant, and the last one, Laurus Labs, again today we are discussing. Today also it came near to that zone, pierced 5 minute zone, but a little above prices went today. See here, this is a 1 minute zone we drawn recently, and it picked up the orders from here. Once this is violated, institutions again creating another 1 minute zone in that area. See today morning, 9:35 candle, see, this 1 minute zone is gone. Now what institutions did after that? They again created a 1 minute zone. Now you can see those 1 minute zones. Drop, base, drop at the hidden body. This is a drop candle. That way you can draw a zone like this, a new 1 minute supply zone. Apart from that, they also created one more 1 minute supply zone. One is at this proximal of this pierced 5 minute zone. This is the pierced 5 minute zone. At this distal line they created, and proximal line also they created one more zone here. Let me draw. It's like both are like LOTL zones, very near. The zone is created and moved up, picked up the orders, and then sharply it came down. One more LOTL also they created here. Here also. Here prices came near and came down. But anyway, our focus should be now in this one. Probably here the institutions will play within this area for next 1 or 2 days. They're playing Laris Lab like anything. Okay, anyway, we are not including this as a part of HLQ zone strategy. These are all based on peer-set zone strategies institutions are playing here. So this is the 5 minutes high liquidity zone. How they are playing in this area. It is pierced. But in that area only they are creating new order flows. Okay, this is about high liquidity zone analysis. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.